Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So you can see yesterday gold has shown nice bounce from the support area that we discussed in video. But currently, the situation stands still that gold keeps valid both directions. So on a daily chart, in general, we have the bullish trend because you can see it based on the MACD. Trend stands bullish. Market shows upward direction. Recently, we haven't got any grabbers. So on the euro currency we had, but here is not. So we have just minor bullish upward pullback. So this pullback could be treated in two ways. So first of all, as you can see, it has happened after bearish reversal swing down, bearish reversal candle. And in fact, it could be treated as a big bearish engulfing. So it could be treated as a retracement back in the body of the pattern with the coming downside continuation. Which means that currently, if those of you who intend to go short on the intraday charts have the point where you need to make the decision whether you would like to go short or not. At the same time, on the bullish side, we haven't got the few moments that we would like to. So we do not have the bullish pattern on the daily. On the 4-hour time frame chart, we have confidence support and healthy pullback here. But on the lower time frame, on the hourly chart, we do not have any clear bullish reversal pattern or something of that sort here. So it means that we have very weak bullish context for taking the position. Besides, right now with this recent pullback, if you haven't taken the position right here at the bottom, we also have the resistance. So market has completed ABCD XOP target, stands near to resistance level of the 1816, 1880. And now we're starting moving down again, as you can see. So to make the decision on the long entry, we need to see at least the failure of the bearish, short-term bearish context. And it could happen only if market will break these layers to the upside. So if we will see later in the session or maybe tomorrow, upward action above this area back to the previous top, that will be clear confirmation that probably short-term bearish setup that has happened here after this collapse is failing. So in general, we said recently that this drop should not be overvalued, the importance of it should not be overvalued, because this is mostly attempt to play on the fears of the investors, just because nobody knows what is going on, how Omicron will make impact on the economy, what statistics we will get within a couple of weeks, because we get the new picture of the economy. We will get all numbers, I mean CPI, PPI, inflation. We will get retail sales, which is a consumption. We will get job report, and we get the sentiment with the multiple PMI numbers this week. So that in general gives us the picture of what is going on here. And this is an attempt to shake the boat until nobody knows really what is going on. So that's why the importance of this, is questionable, arguable. So, but from the technical point of view, as I said, there's two moments to keep an eye on. If you have the bearish view, you would like to take the short position, this is very important level, because this is a strong resistance, and also this is some kind of the signal line indicator. So bearish context will be valid if market will not break the area to the upside, because for normal progress of the bearish context, market should show the initial drop, retracement to some major support, major resistance area, and downward continuation. Currently, market stands at this important resistance area, so we should not break it up. So this is simultaneously the perfect point for position taking, and simultaneously kind of the invalidation point, the red line for the bearish stop. For the targets, speaking on the targets, it might be some kind of the A, B, C, top, D pattern, but if we recall what we said about the 3 drive, it means that market should take out of these lows with this bearish behavior. So it means that with the big chances to happen if bearish scenario keep going as it should, we probably should get something like ABCD pattern down right to the 618 support, right? So you can see to the 1783, 1784 major 618 support, create the ABCD target and agreement, and simultaneously complete all targets of the bearish patterns that we have. So for taking the long position, I think that it is a bit early, since we do not have any clear bullish sign by far except this pullback. But it might be just a reaction on the strong confidence support that we have here. At least to get some confidence with the bullish continuation, we need to see the breakout of this area and erasing of this resistance. So that will be something that we need that we could use, and that bulls could put on the credit side. So let's keep watching and see what will happen.